For good news for Nvidia Oppenheimer raising its price target on the chipmaker from $110 to $150 following its stock, split the analysts behind the call, saying Nvidia has several tailwinds driving, quote, sustained outsized top-line growth. And Brad, this is one of several price target raises that we saw analysts at Goldman Sachs, also Argus Research raising their respective price targets. Now Argus saying that there's continued momentum that we could see for Nvidia shares in 2025 after strong grow in 2024. So you know this is a stock that has just been on such a tear up about 150% year to date. And now all of these analysts seeing a lot more room to run as they go beyond just the data center, but also opportunities in some of their other areas of the business. Yeah, Evercore, SC Goldman, they had been out with their notes early to start the week and to end last week as well here, so all of these things considered a lot more affordability perhaps on the mindset of retail investors. Nvidia, especially as it's been talked about by Goldman Sachs, as the DOI play more generally speaking now, it's more increasingly about where they can continue to see some of that chip demand, especially as the rest of the market is trying to move towards application. And what that means is the applications sitting on top of the models that then sit on top of the chips. And so if you've already got the chips and the chips are going to continue to grow out, you think about the inferential technology that these companies were talking about at Computex a couple weeks back, or just 2 weeks ago, as everyone was saying, sure, we have 60,000 chip data centers right now that could easily get to a 1 million chip data center that continues to benefit Nvidia. That's why we have analysts come on our show talking about how, yeah, this market cap that we've seen it get to this $3 trillion could just be the still starting point here, which is crazy, and especially after the 10-for-1 stock play. One question I had was how have we reached a ceiling? Where is there more room to run here? And consistently we've heard from guests that on our show analyst, they're saying that there is more room to run gaming, automotive. There are two areas of the business that there's some potential growth opportunities there. Yeah, Oppenheimer is providing Nvidia with the best positioning status for this full stack AI hardware, networking, and software solutions. So we'll keep an eye on shares of Nvidia throughout the week. You were invested in Nvidia before it was cool. You bought it at $4 back in 2014, and you rode the wave from this specific stock, Cathie, to $330 back in 2021. However, you missed the recent rally because you sold out of your main stake in the flagship ARK Innovation ETF back in January. So if you stood even so, not many people believe what we're looking at. We're looking at the relative valuations of names in the artificial intelligence space, and we looked at Nvidia, which is currently valued at 25 times sales, and Tesla, which is arguably the biggest AI story out there, which is valued at 6 times earnings. UiPath yesterday. Although Tesla isn't earning 6 times sales UiPath, it's still a beautiful AI play, and you can see it in some of our more specialized portfolios. Tesla is coming up with its own chip, Meta Platforms, Google their own chips for more specialized large language models, and then the tech itself we're learning from Meta Platforms, the Llama model, is able to do with less computing power, but more data, it's able to deliver better models, so there are puts and takes here, as there always are. How many frustrated investors have got in touch with you via Twitter, or the other forms in which you connect with your own purchases, or the ETFs? I mean, there must have been a lot of frustration that you kept it in some funds, but not the main ARK ETF. Well, I'll tell you what has happened, mostly as people who understood the Nvidia story, we were pounding the table on it on 2014, really till 2021, and many people actually put it into their portfolios, their own portfolios, and they may have held it. We have not gotten much pushback. And the reason is people know that we are on AI. But we're doing it in a little bit of a differentiated way. Nvidia has become a check-the-book stock, that's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise. So we're just pivoting to another set of plays that most people have not discovered yet, much like they did not understand that Nvidia was an AI play really until very recently. So Palantir you mentioned, or UiPath you mentioned, Tesla you mentioned. There's actually quite a few, though it seems relatively limited overall AI-focused names that you have. Am I missing something? There far more AI exposure within your flagship fund, Or are you really just deciding that there are going to be a few key names that you back? No, Twilio would be another name almost every company, except for, well, actually even including the multiomic companies like Exact Sciences, are using their own proprietary data and their broad distribution networks to gather information and create better products and services. So I would say almost every company that we have in the portfolio is in some way, shape, or form. We ask the question, how are you harnessing this a powerful tool called artificial intelligence? And I would say 90% of the names in the portfolio are harnessing it and do have proprietary data. What caught my eye? And we've actually seen so much disruption already to the market capitalization of companies when they have found themselves disrupted by, for example, a chat git. I think of the education company, but you noted that Apple, for example, its apps platform could be disintermediated by chat GPT platforms. Is that a key company that we need to worry about being disrupted? What other names do you think that come to mind that maybe the market has it wrong on how much they could be overwhelmed by this new competitor? Well, for Google, a chat GPT was either the worst thing that has ever happened to it, or maybe the best thing. We tend to think it's going to be disintermediated, though, by chat GPT and other chatbots. We're not going to need the kind of search, and therefore advertising that drives up Google's model. So we do worry about that one. And as you said, Apple, there are many people who think that even Amazon is going to be disrupted, not only by social commerce, so people just shopping through Instagram and other social media sites, Pinterest, but it also could be disintermediated, as if consumers use chat GPT and other AI tools to say, I want exactly this kind of item at the cheapest price anywhere in the world, and it would go directly to that source. So any platform that has served as an intermediary is at risk. We would say Nvidia has been holding steady, as you see, despite, of course, a broader sell-up on the market. CEO Jensen Huang speaking this hour, and CMA Modi has brought us a few headlines from that. SEMA CEO of Nvidia Jensen Huang argues for accelerated computing and highlights the critical role Nvidia is playing in enabling quicker model execution inside data centers.